So, good morning, dear students. So today we continue with company law. We are going through chapter 3, prospectus and allotment of securities, an important chapter. And this chapter is going to enable us understand the meaning of the term prospectus, different types of prospectus, procedure for allotment of securities, all that we are going to cover. If you remember in the last class, we discussed briefly about this. We have discussed that there are two parts to this. Part 1 of this chapter is about public offer. Part 2 of this chapter is about private placement. Correct? That's what we discussed in the last class. I also covered section 23. What is public offer and what is private placement? Normally, in case of a company, the securities are issued to public at large, which is normally referred to as a public offer. So when a company is going to come up with a public offer for the first time, we refer it to as an initial public offer. And maybe subsequently, if they come up with an issue, we can call it as further public offer or follow-on public offer. Both are correct ones. Okay, so company can make an issue of shares to the public, referred to as IPO, initial public offer. What happens in IPO? The company comes up with a prospectus. Any security, very important, any security issued, particularly I'm talking about shares and debentures, of course. Any security issued by a company to any person, then the company has to necessarily issue a document referred to as a prospectus. Prospectus is a document which is referred to as a window through which we see the company. That is, normally when you join a course, you try to take the prospectus from the institute to understand about the course, syllabus, content, examination pattern, fee structure, opportunities available, syllabus in detail. Everything is available in the prospectus. So if you want to know about the course in the institute, you go through the prospectus. Same thing happens in case of a company. Whenever a company is going to come up with the issue of shares or securities, we need to necessarily issue a document referred to as a prospectus. So we are going to discuss in detail about what is prospectus and what are the various contents of prospectus. And very importantly, the prospectus should not contain anything which is misleading or erroneous or wrongful statement. The prospectus should not contain anything which is erroneous. The prospectus should not contain anything which is misleading, because the person who is going to subscribe for securities in the company is going to go through the prospectus and apply for shares or securities. So if there is anything which is not wrong or consciously or trying to commit a fraud, then there is a serious problem. So we are going to discuss about implications of wrongful statement in the prospectus. So that is another part of the aspect regarding prospectus. We are going to discuss that also. So I'll take you through a presentation now in terms of various aspects regarding this chapter 3. Okay, right. So I'll share the PowerPoint presentation. Kindly let me know if you're able to see that. Able to see the screen?
Yes, sir.
Yes, sir.
Okay, good. So all of you are able to see the screen? Good. So this is a very interesting slide which will enable you to understand what is all about issue of securities. Issue of securities by a public company, as section 23 provides. A public company may issue securities either through something called a public offer or through private placement. And also, the company can issue shares in the form of rights or bonus issues. So typically a public company has got a choice to issue. Look at this, public company. They have a choice to issue through a public offer or through a private placement, or they can issue rights and bonus shares. And when we talk of private placement given to a selective group of people like institutional investors, etc., it is referred to as a private placement. For example, a company wants to offer securities to a foreign institution, it is a private placement. Secondly, it can offer its securities through public issue, which is referred to as initial public offer. Shortly, we call it as IPO. And it can either be a fresh issue or offer for sale. Yeah, a company, when it's making its initial public offer, it can either make it through a fresh issue to the public or to an offer for sale. An offer for sale we discuss in detail as we progress is nothing but securities offered by promoters to a public because they want to offload the shares, and that is referred to as an offer for sale. And further public offer or follow-on public offer, where a public company can make a fresh issue or an offer for sale. So this is in a summary what are the various types of issues a company can make. Issue of securities, particularly a public company. Whereas in case of a private company, you all know there is a restriction on public issue of shares. So they can only make issue through a private placement or by way of rights or bonus issue. So when we talk of a private company, please keep in mind they can issue only shares through private placement or through rights or bonus issue. So they cannot make a public issue like IPO, etc., because there is a restriction on issue of shares to the public. I think you're all very much clear about what is private company. Now let us understand this further. So I think quickly we'll go through this. Part 1 of this particular chapter 3 deals with public offer, and part 2 deals with the private placement, as we discussed just now. And section 23 is a section of the act which provides for that a company can issue securities, and it depends on whether it's a public or a private company. So a public company may issue securities through a document called prospectus, which is referred to as a public offer, by complying with the provisions of part 1 of chapter 3 of this act. So now we are going to discuss in detail about what is the meaning of the term prospectus and all that as we progress. And this section 23 provides that a company which is a public company may also issue securities through private placement. We discussed that just now, the earlier slide, or through rights and bonus issue. I think in the Companies Act, we have covered in detail what is rights issue, what is a bonus issue. Now, with respect to a private company, as we discussed, they can only issue through rights or bonus issue and through private placement. So they cannot make a public issue. I think you're all very much clear about this simple set of points with respect to a public company can issue securities in what form, and a private company can issue securities in what form. Coming to an important definition of securities. If you recollect, in the earlier class we discussed about anybody. Did any one of you had a chance to go through the definition of securities earlier? Did any one of you had a chance to go through the definition of securities? You remember I told you that securities are defined under what act? The definition of securities, you have to pick it up from Dash Act. What is it act? Now, with respect to Sale of Goods Act, the definition of sale, not normally what we call sale, has got definitions in a different act. But the most important definition for sale is under Sale of Goods Act. When we talk of sale of goods, correct? Similarly, when we talk of various types of definitions, each act becomes important. Now, when we talk of securities, which is the act that is important? Where from the definition of securities is picked up? Any idea? We discussed this in the last class. I don't know whether you remember that. So I was talking about the issue of securities. Under that, we discussed about the term securities. Any idea? The definition of securities is very popular under a particular act. What is that act?
SEBI.
What act?
SEBI.
SEBI is actually SEBI is an authority which controls issue of securities. So securities, issue of securities is controlled by SEBI, but whereas the definition of securities is prominent in one particular act. That is normally referred to
Contract Regulation Act.
what act?
Securities Contract and Regulation Act.
Very good. That is the act. Securities Contract Regulation Act. Securities Contract Regulation Act. SCRA, what we call. So this is the act which gives definition of securities. I'll take you through the definition. Okay. Very interesting and important to understand that, because whenever we talk of securities, normally securities means in general, for easy understanding, it's shares and debentures. But securities has got different connotations. It covers more than what is something called shares and debentures. What are the items covered under securities? Again, look at this carefully. Securities have been defined. Are you able to see the screen?
Yes, sir.
Good. Look at this definition, very important definition. I think all of you should be familiar with this definition. Kindly quote this definition wherever appropriate in the exam. Securities has been defined under section 2, subsection 81 to mean the securities as defined. See, look at the definition under the Companies Act. Under the Companies Act, securities has been defined under section 2, subsection 81. And what does it say? It says that securities means whatever has been defined under the Securities Contract Regulation Act of 1956. So it is not giving any separate definition. Company law doesn't give you any separate definition for securities. Instead, it is giving reference of Securities Contract Regulation Act. So what does this definition of the Securities Contract Regulation Act look like? That is what I've given here. Securities include, this is an inclusive definition, shares, scrips, stocks, bonds, debentures, debenture stock, or other marketable securities of a like nature in or of any incorporated company or other body corporate. Normally, you are all very much familiar about what is a share. The another name for share is nothing but a scrip. A scrip is a document or an instrument. Stock. Again, there is a difference between share and a stock. Earlier days, when the shares used to be in physical form, and a shareholder may have multiple shares in different numbers in physical form, they'll convert it to a certificate referred to as a stock certificate. And normally a stock is something which is floating in nature. That's why you call it as a stock market. So the shares are available in the market for sale. So there are different connotations to the term called stock. And then we always we refer to bonds, though globally the bond is nothing but an instrument of debt, and debenture is also a type of an instrument of debt, where a company offers debentures to various public and private at the rate of interest. Debenture stock is again similar to shares and stock and any other marketable security. So this is for your understanding that so the securities term is wider in nature. It doesn't stop with shares or debentures. It includes everything else also which is marketable. And not only that, very importantly, securities include something called a derivative. A derivative is a very interesting concept. An instrument or a security which derives its value from an underlying asset is called a derivative. For example, there can be a derivative in shares, there can be a derivative in commodities, there can be derivative in bullion, there can be derivative in any underlying asset. So deriving its value from an underlying asset, we are calling it as a derivative. In stock market, you have two types of dealings. One is called a delivery based trade, another is called a non-delivery based trade through derivatives. So derivatives is a very popular term in the stock market, which is a separate topic in itself, a big topic in itself, how to deal with it and all that we are not getting into it at this point of time. So derivative, for a limited purpose of this definition, means a security which derives its value from an underlying asset, and it is used for contracts in stock markets where public actually can buy and sell derivatives. And not only that, it includes units or any other investments issued by collective investment scheme, and it is to the investors of such schemes. Collective investment schemes means it's not exactly mutual fund, but something like a mutual fund. Now, for example, a company wants to collect from 100 people 10 lakhs each, and they want to invest in some income earning securities, and they give you a unit certificate for that. That is also referred to as a security. And government securities is also coming under the definition of securities, and such other instruments as may be declared by the central government to be the securities, and rights or interest in securities. Rights or interest in securities is also a security. So hope all of you are able to understand this definition, very important definition, and this is all the more important for a subject referred to as security law and capital market for ACS executive students in group 2, module 2, where you have a separate paper itself, wherein you will be dealing in a lot of aspects of securities. Okay, good. All of you understood? Can we move forward?
Yes, sir.
Good.
Yes, sir.
Good. Let us come to section 24 of the Act. Now, when we talk of section 24 of the Act, it is regarding powers of the SEBI to regulate issue and transfer of securities. Now, we are all very much aware as to what is SEBI. SEBI is the nodal authority in India, which is, can you tell me the equivalent authority in US? Like in India, you have SEBI. In US, you have an authority. Can you name that authority? It's general knowledge. So, any idea about that? It is referred to as Securities Exchange Commission. Okay, SEC. So, in US, you have an authority which controls the security market referred to as SEC. In India, you call it as SEBI. One of the important authorities which govern the market. So, Section 24 of the Act, that is the Companies Act, empowers the SEBI to regulate the matters relating to issue and transfer of securities and non-payment of dividend by listed companies or those companies which intend to get their securities listed. Now, many of you would be aware of the fact that a company shares can be listed in the stock market, particularly when we talk of a public company. Their shares can be listed in a stock exchange, and anybody can buy and sell shares through a stock exchange and through a broker. Okay, so SEBI is the authority which controls the entire issue of securities, and through various agencies we have depositories, we have brokers, and we have so many other third-party agents who are operating in the stock market. And so let us say, for example, I want to open a demat account, then I need to go to a broker, the stock broker. The stock broker is somebody who is authorized by SEBI to basically what? Register such shareholders or members or for buyers, and through brokers only buy or sell shares. I cannot directly go and buy and sell and share in a market. I don't have an authority to go and buy and sell in stock market. I buy it through a stock broker or I sell it through a stock broker. My shares are under the custody of whom? My shares are held by whom? When I buy a share of a company, I don't get it in a physical form. I get it in a demat form. All these are controlled by SEBI. And when my shares are in a demat form, my shares are under the custody of an authority referred to as dash. Any idea which is the authority which holds your shares, custodian of your shares? Like a bank is custodian of your money. When shares are in a demat form, you have a custodian of your shares. Who is that? The authority name is what? Any idea? Any idea? No? It's called depositories. Dear students, am I audible?
Yes, sir.
Yeah. So kindly acknowledge now and then, because I am actually opening the screen and speaking so that it will be easier for me to get some quick acknowledgement. So the authority which actually have or has your securities, shares in particular, or anything in a demat form is referred to as depositories. We all know in India we have two types of depositories, or rather two depositories: CSDL, Central Depository, Central Securities Depositories Limited, and NSDL, National Securities Depositories Limited. Okay, this is just for your information only. SEBI is the authority, and all powers relating to prospectus, return of allotment, redemption of preference shares of any other matter contained in this act shall be governed by whom? Central government. So SEBI has got a clear role to play here. All aspects regarding issue of securities, etc., and including issues on payment of dividend, etc., is controlled by SEBI, whereas other aspects like prospectus, return of allotment, redemption of preference shares, etc., is dealt with by central government. The power relating to forward dealing and forward trading, rather, which is coming under the derivatives, forward trading and insider trading, has been delegated to SEBI for listed companies or the companies which intend to get their securities listed. Insider trading is a very powerful concept. Any idea what is insider trading? Any idea? Have you come across this term called insider trading? Any idea? Do you know what is insider trading? Have you come across that?
Information of the
Yeah.
company.
Rahul, tell me.
Yeah, information of the company leaked or like obtained before it is publicized.
Okay, good.
It
You
will
are
be
right.
used for.
Yeah, good. So you have brought out the point very clearly. Insider trading means trading in shares of a company by people who are employees or staff or directors of the company, in terms of buying and selling of shares based on some price sensitive information. Based on some price sensitive information. So as you use the word, you can call it as a leakage of information or whatever. Now, very interestingly, I'll tell you an example here. If you're a director of a company and you are the person who's in the board, and normally what happens is some important matters regarding the company operations are discussed in the board only. The decisions regarding, for example, acquisition. So I am a company which is operating in a software industry. I want to acquire another company, and that company's acquisition will enable our company to grow faster because they are into a different domain. So let us say I am X company, I want to acquire Y company, and Y company is also a medium to large company. And when I acquire that company, my company is going to become bigger. When my company is going to become bigger, what happens? My company is a listed company, and I am going to increase my profits by acquiring that company. Then what happens to my share price, my company share price in the market? Will it increase, or what will happen? I'm going to acquire another company, and the company is a profitable company,
It will
and
increase.
I am doing well and I'm going to acquire the company, then my company will benefit out of this acquisition or not?
It will benefit.
It will benefit. So if my company is going to benefit out of this acquisition, what happens to my company share price? Share price is a reflection of your performance, current performance and future performance. Future performance means when company is going to do well in the near future, so I acquire the shares today itself. So when I'm going to buy share today for a future performance, then it is going to give me value for the shares I buy. So I know that as the director of the company, if I come to know, I'll come to know first naturally. And we are discussing in the board meeting that we are going to buy another company. Then what I will tend to do, forget about being a director, as a common man, I'll try to buy more shares of the company. Now, don't forget the fact I am director of the company. I am a key managerial personnel. I am not supposed to buy. When I buy and sell shares as a person having price sensitive information can be positive or negative. If I know my share prices are going to increase and I go and buy it, or reverse can happen. I know that my share prices are going to fall because my company is doing bad. I will be the first person to know about it, being an insider. Then I can try to sell my shares also. If I am going to do that, SEBI is very, very powerful in that they can penalize you. So you are not supposed to do any insider trading. So they'll track your share purchase and sale. So it's not easy to buy and sell shares in your own company. That is called insider trading. This is all for your information because these things you need to know as a student of a professional course. All of you have understood this? This is called insider trading. Trading by the people who are insider to the company, like directors, employees. That is why we normally have a trading ban or a dealing ban. For a particular time period, they are not allowed the shareholder. You can buy, not during a particular time when the price sensitive information is going to come up. After that, when the price settles down and all, you can buy and sell. No issues as an employee or as a director. In fact, you will be allotted shares. Company itself will allot you shares as a director and all that, like ESOP and all that. So don't worry about that. That part is fine. But you are not supposed to do an insider trading during the dealing ban. The company will very clearly, when the price sensitive information is going to come out, during the time they'll tell you you are not supposed to buy and sell because that's the time you can make profit or avoid a loss. Okay, shall we move on? Okay, good. Now coming to section 25, very important section. This section 25 talks about allotment of securities, etc. And according to section 25, where a company allots or agrees to allot, any securities of the company with a view to all or any of those securities being offered for sale. Now, normally when we talk of an off, there is something called offer for sale and there is something called offered for sale to the public. That is general offer. When shares are going to be offered to the public, it's like an IPO, for example. For an example, IPO. An IPO is also an offer for sale, right? So according to section 25, whenever a company is going to offer for sale to the public, any document, whatever they are going to, any document by which the offer for sale is made to the public shall, for the purposes of issue of securities, be deemed to be what? A prospectus. So whenever a company is going to come up with issue of securities, they have to issue a document referred to as prospectus. And all enactments and rule of law relating to prospectus will apply. Whenever I'm going to give some statement, that is something will be looked like a prospectus, and any omissions or misstatement in the prospectus, as I said earlier, shall be punishable offense, shall be a punishable offense. So any misstatement, omissions from prospectus or otherwise relating to prospectus shall apply. All provisions under the Companies Act regarding any omissions in prospectus shall apply and shall have effect accordingly. As if the securities have been offered to the public for subscription, and as if the person accepting the offer in respect of securities were subscribers for the securities, but without prejudice to the liability, if any, of the person by whom the offer is made in respect of misstatement contained in the document. To put it in a simple term, for easy understanding, this is something given in the Act itself. To make it simple, it means that whenever a company is going to make an offer of securities to the public, it is any statement issued is called a prospectus. And all the applicable provisions of a prospectus regarding misstatement, omission, commission, etc. shall apply, and the people who have authorized the issue of prospectus shall be liable. That's the meaning of this particular statement. Okay. Now, very important, an allotment Now, you all know when a company is going to offer shares, what are the various stages? Normally, you can call it as an application stage, an allotment stage, and a call stage. So here we are normally familiar with the term called allotment. Allotment is a process of giving share to a person. So when you make an application, the company has to allot you the shares. Then only you become owner of the shares. Without allotment, you cannot become owner of the shares. Correct? So we are referring to the allotment here. An allotment of or an agreement to allot securities. An agreement to allot securities can be made between two parties. Let us say, for example, as I said, even in a private placement, I am running a company. I want to offer 1 lakh shares to a financial institution. It's like a private placement. So I will enter into an agreement. So an allotment of or an agreement to allot. If not today, I am giving an agreement that I will allot shares or securities 6 months down the line. So that's what is referred here as an agreement to allot. So an allotment of or an agreement to allot securities was made with a view to the securities being offered for sale to the public. It is shown that an offer for securities or any of them for sale was made within 6 months after allotment or agreement allot. Now what I am going to do is I am going to either offer. Normally what happens, I'll tell you, at the application stage you collect some 5 rupees, at allotment stage you collect some 3 rupees, and final call you collect some 2 rupees, etc. So typically there are 3 stages. Though practically today all shares are allotted without any stages of allotment. When you apply itself, the entire money you have to pay. Particularly I'm referring to public offers, initial public offers, IPO. For example, when you go to apply for share of a company, the share price is 2,000 rupees. You have to make the entire payment of 2,000 and along with the application itself. Once you make the payment, they'll allot the securities. Okay. So unless an offer is made to some private institutions, there is nothing like an agreement for allotment and all that. But yes, if you're going to allot something at a future date, you still enter into an agreement. So an offer of securities or any of them for sale to the public was made within 6 months after allotment or agreement to allot, and that at the date when the offer was made, the whole consideration is yet to be received. Very important. Normally, that's what I told you. At application stage, you collect some money, and at allotment stage, you collect some money, and then when you allot. So they are talking about the allotment money has not been received by you at that time. And this section requires a prospectus to state in addition to the matters required under section 26. Now we are going to go through the section 26 very soon. Section 26 provides for details or contents of a prospectus. So whenever as a company is going to allot shares or securities or is agreeing to allot shares or securities, then what it should do? This section is requiring that a prospectus has to be issued and all contents of prospectus has to be stated in it. And what should be stated here very importantly, the net amount of the consideration received for the allotment or to be received by the company in respect of the offer and the time and place at which the contract where the said securities are being or to be allotted may be inspected. So as I said, understand this carefully because it may so happen that a company may enter into an agreement with the financial institution where the company has promised to offer securities. Then there will be an agreement for inspection. So the prospectus should also state that this is available for inspection at such and such place. Normally, you can keep it at the register office. And the person making the offer were persons named in the prospectus as directors of the company. So normally, the promoters or the directors of the company shall be named in this document. These are all the people who are going to make the offer. So that has to be mentioned in the prospectus. All of you are clear about this? So it's a very important section 25, which we just covered. And in general parlance, we'll come to what is prospectus and all that. So any doubt at this stage? Very important section 25, which talks about allotment and agreement to allot shares or securities to public or to any financial institutions. This is talking about the conditions which apply. That is, they have to issue a document referred to as a prospectus, and the prospectus should particularly contain, apart from other requirements which is given under section 26, certain matters like as I said just now, the agreement details, the consideration details, and where the agreement can be inspected. All those information can be given in the document for public to be aware. Because public, when they apply for shares, they need to know that there is an agreement for offer of securities to someone at a later point of time or whenever it is. So that should be brought out in the document itself. So the statement should contain such particulars. All of you are clear? Now, the interesting part of company law is that there are a lot of provisions which looks very, very simple, but practically they are very much relevant also. Today, the provisions of the Companies Act are very much applied. Every single provision is practically applied. So allotment of, you're all going to become professionals very soon. When you go and join a company or when you go to practice, you will understand each of these provisions will apply. Correct? So every section assumes significance. That is why I try and cover every section almost. I don't leave out any section because in professional code, there's nothing like no important, unimportant. I've been telling this time and again, there's nothing like important, unimportant, everything is important. You can get a question from the simplest of the topic or you can get the question from the toughest topics. So you need to be prepared for it. You need to be, so tune your mind, okay? Tune your mind in such a way that you need to expect the unexpected. I'm telling you repeatedly. You need to expect the unexpected. That is what the professional course offers to you. Sometimes you go to an exam hall with an expectation that you'll get the toughest question, but they'll ask you the easiest questions. Or the reverse can happen. You go to the exam hall assuming that they'll ask very simple questions, but they may ask the toughest questions. I'll take you through some question papers regularly in the classroom also to give you a feel of what type of questions have been asked. Okay, that also I'll be doing simultaneously. We have been doing it also and we'll continue to do that. And I recommend all of you, whenever you prepare a topic or a subject, also go through the past question papers and identify the types of questions that have been asked in a particular topic. Okay, yesterday we had an exam for CA Intermediate. So it's a paper on Group 2, Enterprise Information System and Strategic Management. I'm telling you, dear students, I can tell you with pride or whatever you may call. Okay, and each of the questions have been dealt in detail in the classroom. Honestly, after attending my class, you go and sit in the exam hall, you look at the question paper, you will feel very comfortable. You will not sweat, even in a hot summer. You will feel like cool like a cucumber, what we call them. You will feel like cool like a cucumber. That's the first step in success. When you go to the exam hall and see the question paper and you're feeling comfortable, then you're going to pass the exam. Yes or no? Correct? Question paper பார்த்துட்டு பரவாயில்ல நமக்கு எல்லாம் தெரிஞ்சதுதான் ஓரளவுக்கு படிச்சது கேட்டது எல்லாம் வந்திருக்கு அப்படின்னா then you are going to clear the exam. Okay, so what I mean to say here is go through the provisions in full. Don't skip anything. Try to cover as much as possible. Clear? Reshni, are you clear? Reshni, are you able to hear me? Am I audible?
Yes, sir.
Are you clear? Any doubts?
No, sir.
Very good. Shall we proceed now further?
Yes,
Yeah?
sir.
Good. Thanks for the confirmation, all of you. We'll move on now. So let's continue with this. The next slide, that's about section 26, prospectus. So let's go to prospectus. What is prospectus? So in general parlance, what is a prospectus? Now, how many of you are thorough with the definition of prospectus? Section 2, subsection 70 of the Companies Act provides definition of a prospectus. So anyone of you have gone through that? Look at the definition here. Normally, a prospectus is a document which offers an investor various details about the company. And there's a clear definition under section 2, subsection 70 of the Companies Act as to what is a prospectus. So I'll read out the definition here. Section 2, subsection 70 defines prospectus. It is to mean any document described or issued as a prospectus and includes a red herring prospectus referred to in section 32 or a shelf prospectus referred to in section 31 or any notice, circular advertisement, or any other document inviting offers from the public for subscription or purchase of any securities of a body corporate. So important definition of the Companies Act. So what is a prospectus? Every company issuing securities shall issue prospectus. So what is a prospectus? Is nothing but a document which is giving details about the company, and it can be in any form. Even an advertisement or a circular or any such document is also referred to as a prospectus. So because for IPO and all, you know that there will be a lot of advertisements coming up in newspapers. Some of you would have observed that in newspaper you would have seen a long one-page ad about an IPO and all that. So in that case, whenever you're going to apply for shares of a company, you can ideally go through that particular advertisement coming in the newspaper. It will contain all information about the company and all that. And that is also a type of a prospectus. So a prospectus need not be like a booklet. A simple one-page document, like in the form of an advertisement, is also a prospectus. So prospectus means it can take different forms. Okay. So nothing to tell you that prospectus is the detailed booklet and all that. But very importantly, this definition touches upon two things. One is referred to as a red herring prospectus, and another one is referred to as a shelf prospectus. What is a red herring prospectus? A prospectus which is issued for shareholders without indicating the price and the volume of issue. Now we have in share issue a concept called book building exercise and price discovery mechanism. A company will value its shares. You would have seen in advertisements a company share price is offered with a price band of dash to dash. They would not have mentioned the price. Neither the volume of shares would have been mentioned. That means there is a book building exercise which is going on, through which you are trying to get subscribers for your shares which is being issued, and it includes public and all financial institutions, etc. Since you are not decided on the pricing and the quantum of issue, you put a dot in it. I again request you to go through some. In the Google search, you can do that. Go through some red herring prospectus. I'll try to show you also, probably. I hope we'll have some time to do that. Let us see. Otherwise, you can go through that. So red herring prospectus is nothing but a prospectus which contains all the details about the company, and the issue price is not decided because the book building exercise is going on and price discovery mechanism is happening. So the issue price is not given and the volume is not given, the issue, because issue is something which is to be decided after the completion of the book building exercise and public issue and all that. So that is called as a red herring prospectus. Secondly, we have something called a shelf prospectus. A shelf prospectus is a prospectus which, as an example, I can give you is like a college prospectus. Let us say you want to join a college. You go to college today, they'll give you a prospectus from the shelf. That is a prospectus which is readily available for reference at any point of time. And this shelf prospectus with respect to a company is a prospectus which is available with the company at any point of time. Particularly, this is issued by companies which continuously offer securities. Let us take an example, a company which is issuing debentures once in 3 months. Like, for example, a transport company, Shriram Transport Finance, they offer securities once in 3 months to 6 months. That means they'll have it in the shelf. And anytime, anybody will be given the prospectus. So that is referred to as a shelf prospectus, which is a prospectus, as the word goes, readily available for reference at any point of time. Because the validity of a prospectus itself is normally 30 days or so, but shelf prospectus is given a prolonged validity. So we will be coming to that little later in detail. Red herring prospectus is what it is. Under explanation to section 32 has been referred to mean a prospectus which does not include complete particulars of quantum or price. So this is a key word here. Kindly remember this word. It does not contain information about the quantum or price of securities included therein. And shelf prospectus under explanation to section 31 has been referred to mean a prospectus in respect of which the securities or class of securities included therein or issued for subscription one or more issues over a certain period. This is a key point I was referring to, over a certain period. So whenever a company is going to come up with issue over a certain period of time, then they can issue something called as a shelf prospectus. So the validity of a shelf prospectus would cover not a single issue but multiple issues of securities, because otherwise you cannot keep on printing prospectus separately every time. So since there is a continuous issue of securities, they keep this as a shelf prospectus. So this definition of a prospectus, which is a red herring prospectus or rather a shelf prospectus, also covers its type of a notice or a circular or advertisement or any other document inviting offer from the public for subscription or purchase of securities. Now let me, before I proceed, probably show you what is a red herring prospectus quickly. Okay, so Let me check out. Recently, any idea? Any company which came up with a public issue? Can you name a company? Came up with a public issue? You want to take Paytm or Nika? So, red herring prospectus, I'll show you. It is a big document actually. It's not, it runs into hundreds of pages. Now this is, okay. I'll show you now. 1 minute. Okay, before going into this, I'll ask you a simple question. What is the name of the company which came up with this public issue, popularly referred to as Paytm? What's the name of the company? The Paytm ஓட full form தெரியுமா உங்களுக்கு? General knowledge question. The Paytm, you're all using Paytm? Most of you will be using Paytm or whatever. You may use GPay, Paytm, PhonePay. There's so many payment, digital payment mechanism offers applicable today, available today. So Paytm ஓட full form தெரியுமா? Paytm எப்போ first start ஆச்சு தெரியுமா? That was the first company to start. I'm not hearing you. Are you anyone of you are answering this question?
The mother company name is 197 Communication.
Very good. So the company name is 197 Communication. 1 ONE, 97 in numericals, Communications Limited. Okay, it came up with a very big public issue. Okay, recently. You all know that. Yeah, tell me, Rahul.
Paytm full form pay in time or something like that.
Sir,
Not
Paytm full form paid through mobile, sir.
Pay through mobile, exactly. Paytm full form is pay through mobile. Is there any one of you who are aspiring to become IAS, Indian Administrative Service, UPSC, or IRS? Any one of you having an aspiration to become an IAS or IRS? No. None of you are planning to do IAS? Is there any one of you who want to become a big, want to join RBI and want to become RBI governor? Is there anyone who want to become a Supreme Court judge? Is there anyone who want to become a C&AG, Comptroller and Auditor General of India? Is there anyone I want to become Minister of Finance? You can tell me, what is the problem? Is there anyone who is dreaming to become like that? Or aiming? Brings in smiles in your face when I ask this question. Do you know any data that today one of the most sought for job in the recent the revival I would call it as a revival. What is the area which is getting revived? Is the job opportunities available in the government sector and various public sector banks and all that. In fact, 25-30 years before, when I was doing my degree, one of the most sought for job was a bank job. Anybody who used to finish his degree or her degree, the first thing they would like to do is appear for bank exams and try to get a bank job. 25 years before, or even before that, 30-35 years before, there are a lot of people, particularly I'm talking about Tamil Nadu and Chennai, they were interested in joining in government services. So many of the Tamil people, Chennai and Tamil people, or from South India, they wrote a lot of exams like Staff Selection Commission for central government jobs, ministry, and they got jobs in Delhi. That is why in Delhi you'll find a lot of South Indian and all that. There are a lot of South Indian localities in Delhi because a lot of people moved to Delhi from Chennai, Tamil Nadu, and all that for a job in central government. Most sought for. So when you're going to professionally qualify yourself, you have opportunities in the government sector. Like you can join SEBI. SEBI is quasi-government, okay, and you can join an RBI. You can try to become an RBI governor. You can become a SEBI chairman. All that. So I hope you all have such aim that you want to become somebody like them. So good. Why am I telling you this is then? It is the time for you to keep yourself abreast of various developments and things. And it is not just what is in your academic book, it is beyond that. 360-degree learning is important. We are also offering, I am proud to say, our coaching center is one of the coaching centers which are offering a sort of a 360-degree learning for our students. I am not trying to teach you for UPSC exams. No, but you follow my Telegram channel. Recently, we have started sharing a lot of general knowledge, current affairs, and all that. Kindly go through that. If you have some 5 minutes time at your disposal, kindly go through that. Then it will be useful for you to keep yourself updated on a lot of such development. So coming back to this red herring prospectus, this company name is called 197 Communication. Good, Rahul, you said it right. And this company, Paytm, means pay through mobile. When the government started payment of this digital payment and all that, then the first company that started its operation was Paytm. So I'll just tell you how or show you how this red herring prospectus will look like. Okay, red herring prospectus is ultimately a prospectus. So there's no denial of that, but it is a prospectus which doesn't contain some information. Now I'm going to show you that. Because your learning is complete, as I keep saying, only when you relate your learning to reality. Our philosophy is relate to reality. Because when I was a student, that is where I had a tough time. I was not able to relate to reality. You will not believe it is something which, even after qualifying as a professional, I was not familiar with what was stock market, how it operates, what goes on. I was not familiar, even after qualification. So that is not the world for you today. Today you have the world in your whatever mobile or laptop. So you have everything that can be seen, done, and all that. So let me now show you this. The red herring prospectus is a prospectus which is not going to give details about the quantum of issue or the price. So how does it look like? I'll show you. So this is how it looks. I'll share the screen. Able to see the screen? The screen visible to all of you? No?
No,
Screen
sir.
visible here. Screen theriyaleya?
It was visible.
Theriyaleya?
It is visible, sir.
Now?
Sir, it came and went.
Okay. Sorry?
It came and went for me.
Okay. Let me share it once
Now,
again.
now it is visible.
I don't know what's the issue. Some technical glitches are always
No,
happening.
like yesterday, you need to come out and get logged automatically.
So students have to come out and join in back. Okay, don't worry. I'll try and see if I can sort it out. 1 minute, give me a minute. There are a few other files open also. Probably that's the reason. Now,
It is visible.
so for those who are not able to see, then just log out and log in. So this is the sample, I would say, of a draft red herring prospectus. So it is actually, as I said, it's got 539 pages that you could see that here. It's not a 5-page document, it's a 539-page document. The company name is here. Our company was incorporated as 197 Communications Private Limited under the Companies Act 1956, etc., etc. And corporate identity number is given here. Register office address is given here, and website address is also given. And look at this initial public offering of up to dot. This is what I said. The price per share is not going to be given to you. Neither the quantum of issue is not going to be given to you. And face value of 10 rupees each, etc. The company is going to offer the securities to the public through IPO. And this is the draft red herring prospectus, which is containing a lot of information. So these are all the book running lead managers, the people who actually manage the issue of shares. As I said, ACS students in particular, you have this as part of your capital market syllabus, this group 2, module 2 paper. So this is the, these are all the people behind the public issue of shares of Paytm, book running lead managers. You have bankers and all that, and then it goes on and on and on. So this was issued on, the issue was open on November 8th. Okay. So it is called a bidding mechanism. Now, very important, when I said book building, so look at this. This has got so much of information about the company. Okay, so that is why it's a prospectus. Okay, now I'll not get into details, that's not the idea, but just to give you a feel of it. Now, whenever a company is going to come up with a prospectus, which is referred to as a red herring prospectus, the quantum of issue is not known, the pricing of issue is not known, it is done through a book building mechanism. So they will try to seek bid from the shareholders and all that, and financial institutions, then they'll try to arrive at a price, and for IPO, they'll fix that price. That's a mechanism of price discovery and all that. Okay, that is the purpose of issuing a red herring prospectus. Normally, the red herring prospectus, once it is issued and book building process is complete, then only they finalize the terms of issue and they'll issue something called a prospectus. So shall we move on now? All of you are clear? So let me now continue with the presentation. Is the screen visible now?
Yes, sir.
Okay, great. Let's move on now. Every prospectus issued by or on behalf of a public company, either with reference to its formation or subsequently, by or on behalf of any person who is or has been engaged or interested in formation of a public company, shall be dated. That means every prospectus shall be dated and signed and shall state such information as may be required to be set
Screen
out.
is not visible, sir. See, screen is
not.
ATM.
Okay, 1 minute. I need to change that. Now is it visible? Is it visible now?
No, sir.
What's the problem? I have shared the PPT. Why it's not coming, I don't know. So if you can. Again, visible or not visible? Now, how many of you are able to see the screen?
I could, sir.
Rahul, you are able to see the screen?
Yes, sir, I could.
Okay. Now, others, can you just quickly log out and log in again? I don't know what.
Not need to log out, sir. Just to change the screen. Change to the other screen. That is sufficient.
Okay, you have to change to the other screen. Yeah. So, can you try that out? What's happening? தெரியலையா ஸ்கிரீன் யாருக்குமே தெரியலையா?
I can see, sir.
Sai Lakshmi, you're able to see the screen?
Yeah, I can see.
Okay. So, Sweta?
Yes, sir. Now I can see the screen, sir.
Okay, let's proceed now. So, yeah. So let me proceed now. So prospectus is nothing but a document which has been issued. It has to be dated and signed and all that. and every prospectus issued by the company shall provide such information, shall be dated and signed. No prospectus shall be issued by or on behalf of a company or in relation to an intended company unless on or before the date of its publication it has been delivered to registrar. So very importantly, the prospectus as a document should be delivered to registrar, and a copy thereof signed by every person who is named in as a director or proposed director has to sign it and give it to the registrar. And the prospectus which is issued under 32 subsection 1 shall not include a statement purporting to be made by an expert unless the expert is a person who is not and has not been engaged or interested in formation or promotion or management of the company and is given his written consent. Okay, now let me explain this. Normally what happens in the prospectus, you will have some details about the prospectus, and not only that, you will have a statement from some experts. For example, let us say this company is going to come up with a public issue and it's a technology company, and there may be some expert who is expert in technology. We may have to incorporate a report of this expert in terms of this company, about the company and prospects probably. So this expert should no way be connected to the company. He should be a third person. Let us say I am a chartered accountant, I am an expert in finance and accounting and taxation. So I am going to give an expert statement which is included in the prospectus of the company. So it's referred to as a statement of an expert. Whenever a statement of an expert is included in the prospectus, it is important to note that the expert is in no way directly or indirectly connected with the company. That means he doesn't have any conflict of interest. Okay, and the expert will be liable for whatever is said. That's an important point. So he's going to offer his services as an expert, and whatever is said in the prospectus as a statement from an expert should be published in the prospectus, and the expert opinion, whatever we refer to here, should be published only after seeking approval from the expert. That means the expert should give in writing, I am happy with my opinion forming part of the prospectus. That is, without his permission or approval, you are not supposed to include the expert statement in the prospectus, because expert is also equally liable for any misstatement in the prospectus in connection to what he has said as an expert. Coming to section 26 subsection 1, read with the company's so we have an important rule, dear students, Prospectus and Allotment of Security Rules 2014. Okay, which is going to give you clear understanding of how to go about issue of securities, etc. And what are the things to be included in the document called prospectus. Very, very important. This is something referred to as contents of prospectus. Names and addresses of the registered office of the company, company secretary, chief financial officer, CFO, auditors, legal advisors, bankers, trustees, if any, and underwriters and such other persons as may be prescribed. So the prospectus is a document which should contain details about all of this: names, addresses, and registered office of the company. We saw that in draft red herring prospectus about Paytm. It contained the address of the company and all that. There is so much other information. I'm just giving you that, whatever is said in the act. Secondly, it should contain the dates of opening of and closing of the issue, and the declaration about the issue of allotment letters and refund within the prescribed time. So the prospectus should contain details about date of opening of the public issue. So again, this Paytm example I gave you, it opens on November 8th, and normally they give you 6 days to close the issue, but normally today practically 3 days is the time. So once a company comes up with an issue of share which opens on 8th November, they'll close it on 11th November or so. So they should give the date of opening and date of closure of the issue, and also declaration about the allotment will be made with such and such date. Again, typically the allotment after the closing of issue should be done within a week's time, and nobody, I mean anybody who has not got the allotted shares, will get a refund also. Okay, that is the information. You should put it in the document called prospectus, and the prospectus should contain a statement by the board of directors about a separate bank account where all money is received out of the public issue is kept until the issue is completed, and any money which is not utilized should be returned back to the shareholders. Now there is an interesting concept called ASBA. Any idea what is ASBA? Any idea what is ASBA? Called, make a note, application supported by block amount. Application supported by blocked amount, ASBA. Now, whenever a company is going to come up with a public issue, you have to allot money from your bank, but that will not be utilized by the company. They will utilize only to the extent of the allotment. That means the blocked amount will be released. Now, what happens, I tell you here. Earlier, what used to happen was, for example, if I want to make an application for a public issue, I should make the full payment to the company. And after that, once allotment is finalized, I may get some shares allotted, or I may not get any shares allotted. Sometimes it may so happen that the issue is oversubscribed. When there is oversubscription for shares, you may get partial allotment or a full refund. So the company will take 1 week time. After that only they'll refund you. But now that's not relevant. Today what is relevant is this concept of ASBA, very, very important. And this ASBA is nothing but you have to block funds in your bank account for the issue which you applied for. And if you get the allotment, they will utilize that money. If not, that money will be released. So that money is in a blocked condition. Very interesting development. Company cannot use that. Earlier, company can temporarily use that, but now that is stopped. This money is blocked from your account, but the company also cannot use, you also cannot use. Only after the allotment process is completed, either you'll be allotted shares or the money will be released. So that's the whole idea behind this concept called ASBA. And then details about underwriting of the issue. What is underwriting? Underwriting is a mechanism where there are people referred to as underwriters who guarantee to procure subscription for securities of the company. They are not like brokers. Brokers are someone who try to procure subscription for a commission. So if they procure subscription for 1 lakh shares, they'll get commission for 1 lakh shares equivalent. But it is not the case with an underwriter. An underwriter is a person who commits to secure subscription. So for example, I am underwriting shares of a company. I tell I will procure subscription for 5 lakh shares. That means I am guaranteeing the company and I'll get an underwriting commission. If I'm not able to seek buyers for the shares, I have to buy it because I'm guaranteeing it. That's what is all about an underwriter. Clear? All of you are clear? Then the content should also include consent of the directors, auditors, and bankers to the issue. And I just now told you about expert opinion and should be included in the document referred to as prospectus. The authority for the issue and the details of the resolution passed therefore for public issue of shares and procedure and time schedule for allotment and issue of securities, capital structure of the company in the prescribed manner, main objects of the public offer. You have to stipulate, mention in the prospectus for what purpose you are going to use this money. Then terms of the present issue and such other particulars as may be prescribed. Then you have to state in the prospectus main objects of the company and the present business of the company and its location, schedule of implementation of the project. It may so happen that you are making this public issue for implementing a project. Then you should give the schedule of completion of the project. Because as a shareholder who is going to apply for the shares of the company, I would like to know this. So that should be covered in the prospectus. Then particulars relating to management perception of risk factors, very, very important. Now, when a company is going to come up with a public issue, it should state in the prospectus the risk factors associated with the company operations. What are the typical risk factors generally in any business for that matter? Can you tell me? What are the general risk factors in any business? Let us take Paytm. In Paytm, they came up with some huge public issue. What are all the risk factors you feel that Paytm should include in this prospectus? Because the risk factors are something which has to elaborately detail or provide an adequate detail to the prospective subscriber. What are all the risks the company is likely to face or currently facing? So it is the risk which is currently in place or the risk which is likely to happen. So with your general understanding of the business, would you be able to tell me what are the type of risk this business has got? Paytm. Actually, as per your understanding, what are the type of risk this company can? Because I'm going to subscribe for shares. You know one thing, very interesting. This Paytm share was offered at some X price. I don't exactly remember the price. Very interesting. When I'm talking of risk, no, this is a very classic example of a risk. The company share was offered to public at, let us say, 2,000 rupees. Today, the market price is half of it, 1,000 rupees. After the IPO, the share price has fallen badly. There are many reasons to it. I'm not getting into that now. But is it not a risk for those who are subscribed for shares? You are giving 2,000 rupees and purchasing a share. Today, the share price is only 1,000 rupees. Is it a risk or not a risk? Risk of your capital or not? Risk, yeah. சார் அதெல்லாம் ஒண்ணும் இல்லை சார். 1000 ரூபா தானே சார், பரவாயில்ல அப்படிங்கிறல. 2000 ரூபாய்க்கு வாங்கினா 1000 ரூபாய் ஆயிடுச்சு. ரிஸ்கா இல்லையா?
Yes, sir. Risk, sir.
ரிஸ்க் தானே? கரெக்ட். இட்ஸ் a risk. Risking your capital. Now, when I go to apply for shares of company, they should include risk factors in the prospectus only. So, what are the possible risk factors for a company like Paytm? இப்போ recent one more example I'll give you. You may like it. Nykaa. NYKAA. தெரியுமா Nykaa என்ன company? What is it Nykaa is doing? Who started it? Nykaa is a successful issue. It got oversubscribed, and today the share price is doing well and is expected to do well. What is the nature of the business Nykaa is? Paytm Automobile. It is into what? Nykaa.
Sir, Falguni Nair, owner of it.
Yeah,
And,
Falguni Nair. Okay.
yeah.
So then,
That is beauty care, I think.
yeah, Nykaa as a company, it's very surprising that we have a lot of students who have not heard of this name Nykaa. So, in a way, I'm happy about it, because one interesting thing they used to tell, no, whenever there's Amazon offer, savings சொல்லுவோம் இல்லையா, Deepavali offer, Pongal offer, New Year offer, Christmas offer. So they say save money offer, 25% discount. So they jokingly used to say, no, when you want to save more money, remove all these apps from your mobile. So if you remove all these apps from your mobile, you will completely save all your money. Your purse is intact. That's how. So I think you're all doing the policy of saving your money from not keeping any of this in your mobile phone. Very good. So don't download Amazon app. Don't download Nykaa app. Don't download. There is a company called Sasta Sundar. What is the Sasta Sundar? Sorry, எனக்கு தெரிஞ்சது Swiggy, Zomato. வேற என்ன ஆப்? ஸ்விக்கி, ஜொமேட்டோ ரெண்டு தான் பாப்புலரா இருக்கு. இந்த நைக்கா, இந்த சஸ்தா சுந்தர் அதெல்லாம் பாப்புலராகவே இல்லை. ஓகே, jokes apart. Okay, so Sasta Sundar recently, I was also not sure what this company was doing. I recently came to know they are into selling a lot of products, medicines, beauty items and all that. You can download and check it out. But if you want to save money, don't download any such app. That still remains. Okay. So in fact, ideally, today I feel, I don't know how many of you are feeling that. Today I feel, given a choice, I'll give my phone up, surrender it. I don't want to use my phone. I don't want to have an email. I don't want to have a mobile number. I don't know if you have a similar feeling. Probably you all will think I don't want to have an internet. Daily Karthala class, bore adikirar sir. Daily class எடுத்துட்டு வீடியோ கிளாஸ் வேற பாருங்கிறாரு. given a choice, இன்டர்நெட்டே இல்லைன்னு சொல்லிடலாம் இல்லையா? many of you would be mind voice. Correct? பாஸ் பண்ற வரைக்கும் பல்ல கடிச்சுக்கணும், என்ன பண்றது, ரைட்? பாஸ் பண்ற வரைக்கும் பல்ல கடிச்சுக்கோங்க. Okay, good. So coming back to the point, this company Nykaa, or for that matter Paytm, they will have a lot of risk factors built into the business, which they have to perceive as business people. Competition is one such risk. We are all, any business, this comes in the form of competition. Then government policies. Government policies can change, which is a major risk. So there are issues regarding natural calamities. There are issues regarding such pandemic. All that can be a really, really causing concern for a successful business. So you have to highlight all such issues or risk factors which you perceive to be risk factors from a business perspective, which as a subscriber, I like to understand it. Honestly, if you go through the risk factors, nobody will ever apply for an IPO if you are really worried about the risk. Because the risk factors, what they have to give is to be in elaborate and detailed form that they have to explain in detail. For example, if I'm running a finance company, I should say my risk is not getting back the money. That means my company even will get closed. I am telling you, my company can even get closed. You will not get your money at all. Inna share vaangriya? Na paravalla vaangren. I'll buy, because it's called a sort of, yes, you are convinced this company is going to do well in the future. So then you buy the shares of the company. So despite the risk factors, you think the management is good. That is why we look at the management. Management is good. They are going to do a good job. I'll subscribe for the shares. Okay. So the prospectus should contain information regarding the risk factors. Don't forget that. So shall we move on? All of you clear? Good. Then it should contain details about the gestation period of the project. Gestation period means the time taken to complete the project and start production. Extent of progress made in the project as of date. Then deadlines for completion of the project, because you are going to use the IPO proceeds for the project. Then any litigation or legal action pending against the company, which is taken by the government or department, which is a income tax department or GST department or any other statutory body during the last 5 years, immediately preceding the year of issue of prospectus against the promoter of the company. Minimum subscription amount payable by way of premium, issue of shares otherwise than on cash. All this information should be contained in the prospectus. Details of directors, including their appointment and remuneration, and such particulars of the nature and extent of their interest in the company should be provided for, and disclosures in the prescribed manner regarding sources of promoters' contribution. So promoters' contribution has come from what source? It is their own money or borrowed money. That has to be mentioned in the prospectus. They should also mention out certain reports, very, very important. So what we discuss about these 14 points are A. Now B. The prospectus should also set out certain reports that should form part of the prospectus. What are those? Report by the auditors of the company with respect to its profits and losses and assets and liabilities and such other matters as may be prescribed, and reports relating to profits and losses for each of the 5 financial years preceding the financial year for the issue of prospectus, and provided that in case of a company with respect to which a period of 5 years has not elapsed from the date of incorporation, the prospectus shall set out in such a manner as may be prescribed the reports relating to profit and loss for each of the financial year preceding the financial year for issue of prospectus. So very important information that should be contained in the prospectus, the financial information, and report by the auditors on the profits and losses of the business and also the assets and liabilities. That means you need to give a summary of your profit and loss and balance sheet, and also explain in detail about the performance of the company with respect to profitability over the last 5 years. And also reports in the prescribed form, which is to be provided by the auditors on the P&L and balance sheet of the company for 5 financial years preceding the date of issue of securities and not more than 180 days. They should give updated information up to 180 days before the public issue of shares. So all information about your profitability and financial assets and liabilities should be given in the prospectus. And in case of a company with respect to which a period of 5 years has not elapsed after its incorporation, sometimes it may so happen that my company got incorporated 2 years before I am coming up with an IPO now. That means only 2 years have elapsed. Then what you should do, the prospectus shall set out in the prescribed manner the reports made by the auditors, that is what we refer to as auditor's report, upon the P&L and balance sheet of the company from the date of its incorporation. That means for the last 2 years. And reports about the business or transaction to which the proceeds of securities are to be applied directly or indirectly. Now, whenever you're going to make a public issue, the public issue can be used for, let us say, for repaying a loan or for expansion or for starting new businesses. So, for example, when we talk of NICA, when you read the prospectus, you can understand for what purpose they are going to use the proceeds of the issue. As I said, some company may be a debt company. They may have a huge debt. Whenever a company is going to issue public shares, then out of the money received from the IPO, they'll repay all the debts or most of its debts. Now, one of the most preferred financial option is not to have any debts in your books. So you may even try to use all your proceeds of IPO to repay, if not in full, at least part of your debts. So that will save some interest for you. So that is about the information to be given in the prospectus. And the registrar, once you submit the prospectus to the registrar, he should register it normally. So the registrar shall not register a prospectus unless the requirements of the section with respect to the registration of prospectus have been duly complied with, and the prospectus should be given to the registrar as we saw earlier, along with consent of all the directors, etc. And every prospectus shall state on the face of it that a copy of the prospectus have been delivered to registrar, because as a subscriber to the share, I would like to know whether registrar has received a copy of the prospectus. I should state it in the prospectus. and specify documents required by the section to be attached to the copy so delivered to the registrar. Whenever it is deliver a document called as prospectus to the registrar, I should give it along with the relevant annexures, and no prospectus shall be valid if it is issued for more than 90 days after the date on which a copy thereof is delivered to the registrar. That means the validity of a prospectus is only for 90 days, which means you have to make a public issue within 90 days after giving it to the registrar. If not, you have to revise and update your prospectus, and then only you have to come up with an issue. In fact, interestingly, this Paytm, they tried earlier, few years before, to come up with a public issue, but they couldn't go through that, so they stopped it actually. So they also prepared a prospectus at that time. Obviously, that prospectus is not going to be relevant today. So they have to make a fresh prospectus, because the validity of a prospectus is only 90 days, after which you have to update and provide the amended prospectus. Okay. Otherwise, the prospectus is not valid. And typically, a prospectus, if it is issued in contravention of any of the section, then the company and official shall be punishable. All of you are clear? Any doubts at this stage? All of you are clear? Any doubts at this stage? Are you clear about contents of prospectus? The prospectus should contain information about the company, and we also discuss about what are the various reports to be contained in the prospectus, and we also discuss about that the prospectus should be given to the registrar, and after the registrar has taken the copy of prospectus along with the annexures, you should state in the prospectus, and then the company can go ahead with issue of prospectus to the public and seek subscription for shares, that is referred to as an IPO. All of you are clear? Any doubt at this stage? A very important area, because practically speaking, you all know that every company nowadays comes up with public issue and all that. So preparation of a prospectus, contents of the prospectus, and the prospectus should not contain something which is misleading. If the prospectus is going to contain something misleading, then the persons who have authorized the issue of the prospectus shall be liable, including the experts who have given their opinion in the prospectus. So there are serious repercussions in respect of something which is what we call untrue statement, misleading statements or untrue statement contained in the prospectus. Because many companies may tend to, or some companies may tend to give wrong information in the prospectus in order to procure subscription for shares for the company. These are all something which will not be permitted. So there will be a huge repercussion in case it's going to contain any untrue statement. Some statement can become untrue later without your knowledge, that you can defend it, but consciously you cannot do that. Because I think one of the students asked me recently also, what is something called a civil fraud and what is something called a criminal fraud or something. Civil fraud and criminal fraud. A civil fraud is something you do without a conscious attempt to commit a fraud. You have committed it, but without even knowing it, it's like a fraud. But something you consciously do is called a criminal fraud. To give you an example, for example, you are trespassing, not a fraud, an act. You are trespassing the land of someone. It's a civil act. So you are punishable because you are not supposed to trespass a private property. That's why they would have put a board also. Trespassers will be prosecuted. So without knowing it, you have trespassed it or crossed it, and they are filing a case against you. It's a civil issue. Whereas you are taking money from the public and cheating them. That is a criminal act. That is, you have a culpable mind, or mens rea, what we call. So we have a lot of law students, Sai Lakshmi and all. So very soon you'll hear a lot from them, first year student. So in the days to come, I think they'll have a lot of legal aspects which they'll also try and share in the classroom. Correct? So these are also interesting legal aspects. Okay, good. So I think the rest of the sections I'll cover it in the next class. So I think we covered some good ground today. Quite a quality-oriented discussion we had on prospectus, contents, and all that. Hope you all have understood it. Important chapter. As you said, this chapter could carry a weightage of 8 to 10 marks in your exam. So try to be thorough in this. We have a few more sections to cover in this particular chapter before we could take up the next one. So I will continue with this in the next session. And being a Sunday today, still I had a class for you with the basic hope that we'll be able to complete your syllabus faster. But As progressively, depending on the time and other availability, we will plan for further sessions. So tomorrow again we'll have a class 7 to 8:30 in the morning. I'll communicate to you. Most probably we'll try to have either cost and management accounting or financial accounting. I'll communicate that to you. So after that, in January, as I said, we'll be starting off with a few subjects like strategic management, financial management, and auditing, etc. As applicable. That's how I have planned it, because there's an exam which is coming up from tomorrow, ACS exam. Hope all of you are aware of that. ACS exams starts tomorrow, 21st. Sorry, 21st is day after tomorrow. Today is 19th, right? Yeah, today is 19th. So exams are starting from 21st. And so these our own students are writing exams. So once they finish off and they come back for the second module, etc., we'll target it by first week of January or so. Okay. So thank you for your active participation. So there are a few absentees today. Some of them have communicated to me, and some of the students have not communicated to me. And as I said, I'm also waking up on a Sunday morning, and where it's cool winter outside, and you feel like sleeping until 9 o'clock in the morning, but you don't have a choice. In fact, to be honest with you, I tell myself when I wake up, I hope it will help you also if you find it difficult to wake up in the morning. One thing I tell myself and wake up, you know what it is? I tell myself, hey, come on, there's no choice. I feel sleepy and I want to sleep for extra 10 minutes or 15 minutes or half an hour or 1 hour being a Sunday. I tell myself, hey, do you have a choice? You don't have a choice. Get up. You have a class at 7 o'clock. You have to go and handle it. Wake up. So I think you all as students also have such things which makes you wake up and attend the class. So thank you for sincerely attending the classes. So without you attending the classes, it's not going to be okay. So I want all of you to attend all the classes, live classes, and also cover the video classes. So without an excuse, because it helps us, because everybody will have personal reasons. I don't deny that, but I'm also trying very hard to make class almost on everyday basis. So everyone has got challenges, but we need to be clear in our goal. My goal is to make you all professionals, to coach you, to teach you. That's my goal. Okay, my duty, my responsibility. It is not the money which makes everything in life. That is, it is not philosophical, but it's a fact. It's not the money which will make your life. It is the knowledge which is going to make your life. So the fees, what students pay me, doesn't make me wake up. The responsibility in me makes me wake up and offer this class to you. So my duty, my responsibility. Similarly, it is your duty, your responsibility to attend all the classes and make full use of it. Even a small point in the class can make all the difference to you. So I don't want any one of you to miss any class. Kindly cooperate. You need to attend all the classes. And if you're not able to attend any class, as a courtesy, as a decorum, as a protocol, whatever you want to call, you kindly inform me beforehand. Secondly, if you want to leave the class in between for any reason, I'm okay with that also. Kindly communicate to me, put a note or whatever in WhatsApp, sir, I'm excusing myself from the class today. I'm not going to ask you for any reason. So let us not be worried about the reasoning, but at least communication. I don't want someone to just leave the class abruptly when the class is going on. 8, 10 students are attending, suddenly I can only 6 students are there. Other 4 has left. That's not appropriate also. Okay, so we are all working with a lot of challenges, technological challenges and other things. So kindly cooperate. Okay, good. Once again, thank you all for attending this class and being interactive. Kindly go through the red herring prospectus. It's available in the open domain. Google, if you put a search, you can take an interesting one, NICA maybe, and go through that. Spend some 15 minutes. I don't want you to spend more time. A lot of time for that. Okay, a lot of time for such social media requirements, and like social media, like what I mean to say is our own Twitter and all that accounts. So Telegram, Twitter, and all that, and newspaper reading, watching a news channel, business news channel. You spend on a day half an hour, like all put together, half an hour. Okay, then you allot for your studies and all that. So kindly do that. I'll catch up with you tomorrow for the next session. Have a great Sunday. Thank you. Take care. Bye.
Thank you, sir.
Bye.
Thank you, sir.